You cannot create wealth without budgets. This is probably the best kept secret to success as an entrepreneur. You need to have assets that generate revenue, and those assets create the wealth that gives you control of your time. But that is not enough by itself. You also need to know how to take that money and turn it into more money, and that only happens through budgeting. Once you understand that, you will be well on the path to financial freedom. In this video, we will show you a budgeting method that will show you how to create wealth when combined with good residual income generating assets. Make sure you stay to the end, as the last principle is essential if you want to grow your wealth. Poor people budgeting. So let's start with how poor people budget. So people who are untrained in money management have two budget categories. Income, this is money that comes in, and spending money. This is money they have to spend that goes out. There are no budgets, there is no control, bills are paid as they come in and often go unpaid if too many come in at once. I was an expert in this type of budgeting until I met my wife, who is a master of real budgeting. And I learned the value of budgeting for building wealth, for creating wealth. So if this is how you budget like a poor person, don't worry. All you need, like me, is a little bit of education and your ability to create wealth will be transformed. Entrepreneurs budget. So let's have a look at how entrepreneurs budget. This is not the only way to budget, and this is a oversimplification in many ways, but this will help you grasp the concept as we go through this budget and show you graphically how that works and explain how each element in the budget works. Income. The first thing we have to track every month is our income. Now, I know that sounds obvious, but it is something a lot of people don't do. They don't have a way of measuring and recording their income. A good accounts package is essential for this. We currently use Xero accounting software, which is simple to use, and that enables us to reconcile daily. This is not a sponsored video, by the way. This is our genuine recommendation. Now, if you have the skills, then Google Sheets is another method you could use, or you could use another type of spreadsheet. But the key point here is that you have to track your income every month, and you have to have a mechanism for that, a software-based mechanism. You have to know how much is coming in. Business account. Now, we take the income from our business and we put that into our business account. Now, here's a tip. Always have a separate bank account for your business. It makes accounting much easier. Never use your personal bank account. It just gets messy. And then when it comes to the accountant or you trying to do the figures, it's really, really difficult. So then what we do is we take that money and we're going to pay that into three basic budgets. So the first one is business expenses budget. These are the expenses that we incur every month. Now, here's an important point. We need to work out our average costs over the year for our business expenses. And then we divide that up into 12 monthly sections, and we put that aside every month. Now, most people who have a business, especially people that tend to work for themselves as a tradesman and they're self-employed, they'll have a good month when they don't have expenses going out that month, and then a bad month when lots of bills come in because they're not budgeting month to month. So it's really important that we put that money aside every month so that there are no bad months, there are no surprises. So for example, let's say you have a video production business like us, and you have equipment that you use that gets worn out, breaks down, needs replacing regularly, or maybe you need to update it. We might spend about £2,400 a year on equipment for the business on average. That means we would then need to put aside £200 a month in a budget for video equipment. Another example of a budget might be our IT equipment. Say you have an iPhone, an iPad, a MacBook, and a dedicated PC that you use in your business. Every 3 to 4 years, all of them are probably going to need replacing or upgrading as business tools. So again, we might say that comes to £6,000 every 4 years. So we need to put aside £1,500 a year, which is £125 a month in that budget. So now we have two budgets in our business expenses already. Then we can add software costs, office supplies, etc. Every business is slightly different, so these are the things you have to account for. A quick note here on something I call budget borrowing. Never borrow from budgets. The temptation with budget systems is to start borrowing money from different budgets to use in other budgets. But if that is happening, review the actual cost of your budgets, as this usually means that a budget is either out of control, we're spending too much, or it is not set high enough. It is not realistic. So if we're spending £5,000 a year on IT equipment and we're only putting $2,400 a year into the budget, we might say we're overspending. But then when we look at that, we might actually see, well, no, this is actually what we do need to spend every year on IT equipment. So we'd have to increase that budget. Or it could just be that we're just buying things the business can't afford right now, and we can make do with what we've got. So we bring them budgets back into line. Now, when you first set your budgets in a new business, you might need to estimate them. But after a while, after the first year and the first couple of years, you will start to get some real world figures, and then you can use them in your budgets once you have them. An estimated budget is better than no budget. So then we have the tax budget. We do the same with our tax account. You will need to get in touch with your accountant. Good accountants pay for themselves, and find out your projected tax bill. You can then put aside a monthly amount to cover your projected tax bill. And here's a danger warning. This is the one budget that, if it is not managed properly, causes the most stress. Because when the tax bill comes in, the government does not care if you can or cannot pay it. They want their money, and it is actually a crime not to have that money and not to pay that money. Make sure you put aside that payment every month. You don't want the government poking around in your business, and they will if they don't think you are giving them their lawful income or they suspect you're not. Now, another thing we also recommend is a separate bank account for the tax money. Not the business bank account, but a separate bank account. And that way it's always safe, it's not mixed up. Now, savings account can be a good place to store the tax money, as any interest is better than no interest. Just make sure you can access that money easily every year when the bill is due. So make sure it's a saving account where you can draw when you want to, not one of these ones where you have to give them a month's notice. And then we also have the emergency budget in the business. This is where we put our emergency fund for our business. This is an amount we set to cover any income emergencies in the business. So a minimum is 1 month's basic income to cover business costs and basic income needs. 3 months is healthy, and 6 months is the absolute optimum. So when you're first starting out, aim for the 1 month, and then as the business has been going a little bit longer and you're feeling like there's a bit more excess, you might build that to 3 months, and then long term, you might want to have a 6-month amount in there. Now, the reason this is very important is because income levels can be very inconsistent throughout the year. So this buffer can help alleviate that and spread the income out. And it also helps us if there is an unexpected cost that you cannot cover in the business. Now, an important note, once this emergency budget is full to the level you want, you then move that income into the profits account. We don't want to keep growing this budget, as too much money sitting in the bank just depreciates. And we'll talk about where that excess goes later. Now we have the profits account. This is the income that is left over once the business account is taken care of and all the bills have been paid and all the budgets have been paid. This profits account then splits the money into a number of different budgets. So what we have is some basic income budgets. Now, here are 3 different budgets we might set up to pay the bills and cover basic living expenses. We have the home bills budget. This covers food, utilities, home maintenance, repairs, transportation costs. The transportation costs might also be shared with the business, or it might be solely under the business, and we'd move that over there. But if it's not, we need to account for it here. We then need a mortgage budget. This is a budget we pay the mortgage from or pay the rent from. And then we have a retirement budget. Now, this account is optional. Some people like to pay into a pension. I personally skip this, and I take all that excess and I put it into the assets account, which is where all this excess is going, which we will explain in a little while. And then we also have to account for our personal budgets. We then have the fun account, which is an amount we put aside each month for meals out, takeaways, holidays, social activities, anything that's social. We need to control that. This is the budget that we need to control the most. This is the one that can spin out of control the quickest. Then there is the charity account, where we assign a portion of our income every month. We could also just set a monthly amount that we donate to the charity of our choice. Now, not everyone does this, not everyone donates. It needs to be budgeted for under personal expenses if we choose to do that. It needs to come out of our personal account. Our assets account. Now, this is where we start to have fun. All of the budgets up to now have been there to track and control expenditure, and that's been all the boring bit. This is the bit that most people struggle with because it feels like we're being restricted. But what all of that does is it helps us to maximize our profits. It helps us to maximize the amount of excess income we have to reinvest. Now, a lot of people at this point will increase the basic income budgets when profits start to grow. Now, the ones that particularly start to grow are the home bills budget, fancy furniture, toys, and cars. Then they're tempted to get a bigger house, which means a bigger mortgage. And then their fun budget starts to grow because they want expensive holidays. We call this lifestyle creep. This is a waste of profits because we can put them to better use as entrepreneurs. We put those profits into the asset account. We don't keep them in the profits account where we can spend them on the home budget or the fun budget. We can then use these profits to create more assets, which creates more profits. And by avoiding lifestyle creep, we can reinvest the profits, and that is what causes our wealth to grow exponentially. Then eventually we will have more than enough profits to improve our lifestyle and increase our fun budget and our home bills budget. So what we do at the beginning as an entrepreneur is we live simply so we can create assets, so we can buy the dream life from the profits of our business. And I talk about this more in our video, The 3 Rules of Wealth, so check that out if that's something you'd like to know more about. So here are 4 ways we can increase the value of our assets and create more residual income from the profits we've stored in our assets account. So if it's an online business, we could invest in new equipment, new software. We could develop our processes so that we can increase productivity for our business. We could reduce the time cost of creating the digital assets that we create. Now, you can do this in any business, but we're talking about online business predominantly here. An important note here is that the business expenses budget is for maintaining the status quo, not expanding the business. So that means we don't buy new additional equipment or try to grow the business out of the business expenses budget. And that stops us spending too much money on a month-to-month basis, and it makes us wait until we've got the profits to expand our business. Because the temptation in business often is to try and expand the business before it's ready to expand, before the income is there to pay for the expansion. And then what happens is people start borrowing, they get in debt, and they get in all sorts of trouble. Another thing we can do is hire contractors to take the mundane workloads off of us so that we could focus on higher level business activities with the time we save. So we might pay someone to take over our marketing. We might pay someone to take over our bookkeeping, or we might pay someone to maybe do some video editing for us and give us our time back so we can create more content. So we're going to pay them so that we free our time up because our time is more valuable than what we pay them. And again, if you think about it, we're paying it out of the assets account. So it has to be there before we can start to do that. We have to have that excess profit before we move forward. And that's a good way to check to see if you're moving forward at the right time. We could create another business that creates residual income-based assets, and we might need to fund that because it might need new equipment or different software. So we're going to take that money out of the assets account and we're going to use that to fund the new business. We can then invest in assets like stocks or property so that we can diversify our income. The more diversified we are, the less risk we are exposed to in business. So what we're doing here is we're tapping into the power of compounding. By reinvesting our profits back into our business, we increase the profits coming through our sources of residual income. So that assets account will create new income and we go through the cycle again. And it's this loop in the graph that you can see that creates the compounding, that creates the wealth. Because the more profits that go through the business, the more we can reinvest, and that's how we get exponential growth. This is what budgeting does when you budget in the right way. It enables you to compound your profits. And that is why good budgeting creates wealth. It took me a long time to learn this, but once I did, it significantly contributed to me being debt-free, mortgage-free, and living in a large house down by the sea. I own my own time, and I can work on whatever I want to work on when I want to work on it. I can start any online business I want to, when I want to. And that is what the power of compounding has enabled me to do. And it can do that for you as well. To encourage you, practice this method of budgeting. It will create wealth in your life. Please like and subscribe if you're enjoying the content. Also, drop a comment below with your thoughts about any of this stuff. Whether you agree or disagree, I'd like to hear what you think about this. Now, if you're starting a new business, and one of the things you're going to need is marketing training. I have a completely free course on online marketing and sales for beginners, and that has over 40,000 students already enrolled, has a 4.5-star average rating, that comes with an exam and a certification, and you can access all of that on my website, and I'll put a link to that in the description below. I also run the Business Buddies training community, so if you found this video and my other videos useful and you want to take a deeper dive into all aspects of entrepreneurship, then check out this special offer that I have for you. You can access my Business Buddies training community, which has 6 masterclass courses that will help you build your own business fast. And by joining that community, you will also have access to my own support. My courses have been taken by 300,000 plus students from all over the world, and you can save over 50% right now on those courses by using the link below. This will get you the best deal on the internet because you're buying direct from us, and we can therefore give you the best discount. Thank you for watching, and I look forward to catching up with you in the next video.